Hello, this is Kendall with Kendall Capital. Today is Friday, April 3rd, 2020. We've continued to have volatility in the markets over the last 2 weeks. We've had daily price movements 2 to 3%. Believe it or not, on historic standards, that's been high, but over the last 3 to 4 weeks, the volatility has actually come down when we were having price movements 5 to 10%. I think in big picture that is a good sign. The financial markets are starting to see and digest the depth and duration of this pandemic. On the good news side, we're seeing Johnson & Johnson actually has a potential vaccine. We have Abbott Labs that actually now has a test that will take just a few minutes to determine whether or not individuals have the coronavirus. I think these are both positive signs. Congress and the President have passed the CARES Act, potentially, from what I understand, within 2 weeks, 2 to 3 weeks, checks will be going out to all families with less than $100,000 of adjusted gross income, and also a generous Small Business Administration loan package. I think these are all very positive signs. On the negative side, we have over 10 million individuals in our country have filed for unemployment claims. That's about 10 times the size of the amount of people who were unemployed in the 2008 crisis. I do believe that the financial markets, through this, once they are able to digest the depth and the breadth, will be able to eventually recover. The financial markets will lead what the economy is doing. I do think we are going to be in a recession. We're going to have at least 2 quarters of back-to-back GDP decline. I think that's safe to say. I think it will be slower when we recover than basically the market is expecting. It will probably be the end of 2020, even 2021. For investors that are in our international 60-40, where we have 60% of the assets in international equities, 40% in fixed income, we've been actually going through the process of rebalancing clients' accounts. We've been selling, or I should say trimming back on the fixed income portion of the portfolio, reallocating to the equity markets in the international markets. That is, from a natural instinct, it's completely different than what our DNA tells us to do. During a crisis, the thought process for most individuals is to go to safety, go to those fixed income securities in this type of market. But this is called tactical asset allocation, and it's basically, trimming back on the segment of the market that's done well, buying into the market when it's down and it's underperformed. Long term, it's a disciplined investment process that does add value. For the clients, and I see individuals wanting to go to that fixed income market. The 10-year treasury, I can't emphasize this enough, is only yielding 0.6, 0.7%. For a $100 investment, that investor in today's market will only have $106, $107 10 years from now. When we do financial plans for clients, we assume a 7.5% rate of return. And we've had several years in the past where we've far exceeded that 7.5% rate of return. But as we did back during those good years, we basically said we are going to have pullbacks in the market. This is very natural. As I like to share the statistics, every 12 to 18 months we have a 5 to 8% pullback. It's very natural. Every 3 to 5 years we have that 10 to 15%. And history is repeating itself. Every 10 years, it's very common for us to have a 20, 25% pullback in the market. So that's why we like to stick to this underlying investment discipline and process. I can't emphasize enough, too, that clients who do want to go, or individuals who do want to go to that fixed income market, if you lock yourself into only a 0.6, 0.7% rate of return, one of 2 things are going to have to happen. One is you're going to have to delay your retirement because you need more years to accumulate funds, or your retirement is not going to be as attractive. You will not have the funds that you need to live your retirement as you've been accustomed to during your working years. But anyway, I can't emphasize enough also, I've enjoyed the opportunity to talk, to email, to have WebEx meetings with you over the past few weeks. I know it's a difficult time for everyone involved, but I do think the disciplined investment process that we have in place will help you meet your long-term financial goals. Also, I can't emphasize enough, please don't hesitate to contact myself, Carol, Brian, Jason, Zeman, Nina, Ty, or myself. We're here to help you, and we look forward to the opportunity to continue to serve you during these difficult times. Take care.